Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, I got another news update for you guys, so let's not waste any time and get right into it. Alright, first up, housing starts and permits continue to fall. US July housing starts 1.446 million, expected was 1.527 million, June 1.559 million, US July housing permits 1.674 million, expected 1.640 million, June was 1.685 million. And so as we can see here, yeah, over the past little bit, it's been a little bit more red than usual, but thing is that's absolutely not out of the norm here. We can see that going back, there's plenty of red that looks just like this, though like this bar is definitely on the longer side looking at starts, for example. And you know what these bars mean is this is the month over month percentage change. And so we can see we were down 9.6% in starts and down 1.3% in permits in July. And so I think what we really need to watch here are for massive downticks like in March and April of 2020, as we can see here, as well as for a much lengthier period of decline, because this goes back to the past 5 years and we can see plenty of decline. And so, yeah, while we've kind of been generally more falling here, it's definitely nothing out of the norm, because we can see the same types of patterns appearing all throughout this place before we pop right back up into the green. So let's keep moving. We'll just have to keep watching where this continues to go. Real retail sales bounce back, which we will get to in just a second. But first up, US July retail sales month over month 0.0%, expected is 0.1%, June is 0.8%. US July core retail sales month over month 0.4%, expected was negative 0.1%, and June was 0.9%. So these graphs right here, once again, this is just the monthly percentage change. On the top here, we have it for regular retail sales, then we have core retail sales. On the bottom, we can see real retail sales have been on a decline for all of 2022, and now we're flat. So it'll be really interesting if we see this tick into the red. And then it's similar story here, that it's started to drop off a little bit more, though not quite as consistently. Again, going to be interesting to see if this will fall into the red for an extended period of time. Alright, and so this is what I wanted to look into a little bit more here. This is the part that's more interesting because it actually tells us something, which the prior numbers don't really, because they don't bring into account inflation. This will. US July retail sales month over month was 0.1%, CPI adjusted 0.0%, since of course CPI came out as being completely flat in July. US July core retail sales month over month was 0.4%, core CPI adjusted makes it 0.1%, and we can see this chart from Zero Hedge here for the core. They didn't offer one for regular, just core, but I imagine the story is very similar. We can see through almost all of 2022 that it has been in the red, and going back the past 5 years, that's not normal. It is almost always in the green. We have a few other times we have, looks like this is December of 2018, and then we see in, I'm going to presume this is March or April of 2020. And so of course, seeing a lot of this red, not exactly a good thing. And even this green is a lot lower than what we normally see. And so I think we're going to have to watch to see if this continues in the red, because of course that shows that when, sure, your regular retail sales might show as green, but adjust that for inflation, and of course it's worse than this because inflation is much higher than what the CPI tells us, because of course the CPI is all faked and made up. In reality, this shows that the consumer is not doing very well if there is, less consuming happening in actuality. Combine that with, consumer credit skyrocketing, debt skyrocketing, inflation remaining high, as well as this next chart we're going to look at. It's all just not good all around, though we haven't quite seen things just completely break apart quite yet. We'll have to watch and see for things to start completely breaking, like we saw like for those housing numbers we just looked at. Not breaking yet, though there's some things that are starting to not look good for sure, as we've seen over the past couple months, with, of course, inflation having been the most notable. If, you knew a single thing about economics back in March 2020, that would have been obvious. And so now we're starting to see the rest of that come along with the inflation as well. So, speaking of inflation though, oil will go higher. This is a very interesting chart here. Biden selling SPR reserves to win midterm votes has to be in the top 10 dumbest policy errors of all time. Enjoy paying $10 at the pump by Christmas. And so we can see here, U.S. commercial crude oil stocks, weekly million barrels. When we adjust it to remove the effect of SPR transfers, it is not good, right? Because of course oil goes up in price if there's less oil to go around. And so we can see this is where the numbers are in actuality, but if you remove the SPR transfers, since of course eventually you can't just keep completely draining the SPR. You're going to have to keep some of it there, or eventually you will just flat out run out, which is not what you want, of course. So once the SPR stops transferring out oil, chances are we are going to see this number fall significantly. Therefore, the price of oil is going to shoot quite a ways up, which of course not good for the economy either. But once again, as we've been seeing the past couple months, that, yeah, of course, inflation, that's been bad for a while now, but it's only other things are kind of just starting to break, potentially on the verge of it again. So that's why we have to keep watching these numbers so we can see when things are actually breaking. Anyways, that's all I've got for today. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.